And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets, and always with an eye toward helping you outperform the markets. So let's take a look at our agenda today. We are going to go ahead, as usual, take a look at the current markets. We want to make sure the backdrop is there, it's healthy. From there, we are going to take a look at another new industry group that's potentially beginning an uptrend. For those of you that watched last week's show, you may recall that we picked up on that move into financials, which did carry through this week. And if you haven't seen it, I would urge you to go ahead and take a look at last week's show. You'll learn lots as usual, but there is a newer area that is coming into play. And then also we are seeing a move into higher yielding stocks, and a lot of that has to do with inflation. We did get mixed data relating to that, but overall we are in a period of higher or certainly elevated inflation. And in turn, investors appear to be moving into some of these higher yielding stocks as a way to combat that. Also, I'm going to share with you some interesting consumer discretionary stocks. Earnings are looming. Consumer discretionary stocks are the last area that report earnings. So we are next week and beyond going to start. I know Target reports next week, and it will begin to have a domino effect as it relates to discretionary. So we'll get into that as well. So let's go ahead and get started by taking a look at the broader markets. So first up, we can take a peek here at the Dow Jones Industrial Average. I'm pointing this index out because it was the top performer last week. And we can see that it did inch to a new high, and all about cyclical stocks doing well. Last week, the Senate passed Biden's $1 trillion infrastructure plan, and that in turn did boost industrial stocks, materials, as well as other areas. Financials also, as I mentioned, continued to pick up. So the Dow is looking quite constructive. The S&P and NASDAQ also look interesting, or certainly are in uptrends as well. So overall, we do have a nice broader market backdrop that is positive. Let's go ahead from here. And as usual, we are going to be taking a look at those 11 sectors within the S&P. And I've gone ahead and added that relative strength indicator and then sorting it in descending. So your stronger areas up here on the upper left quartile. I'm going to go ahead and update that. And what we can see immediately is utility and staple stocks appear in the forefront. And I know normally that would be viewed as defensive, but I talked about that move into higher yielding. That's going to be these areas as well as other areas. And then also utility stocks coming out with their numbers, particularly electric related, whether it's in a particular part of the country, but we're going to get into some of those utility stocks that are looking interesting and offering that high yield. Staples, there was a bit in the way of merger activity and others, but we do have a couple of high yielders there to take a look at. And then basic materials. This was the top performer last week. Let's take a look at this nice downtrend reversal. And the biggest movers here are steel related stocks. So very much related to that infrastructure bill. Financials, we picked up on the move into financials last week. This is another area that continued to be a top performer this week, up 2%. However, we can see it pulled back today. I'm going to share with you why and what we're going to need to be on the lookout for as it relates to financial stocks. And then as we move on, healthcare, a little bit dicey, but overall vaccine-related stocks continuing to outperform in that area with the Delta variant continuing to spread, unfortunately. So let's move on from here because I wanted to share with you that technology stocks were mostly flat. However, we did see a nice relatively nice end of week resumption of the upward move following a pullback. So I'm going to go ahead and share with you what area helped tech this week and which area really did not. And then from here, we can take a quick look at industrial stocks. Now, this is a cyclical area that I know from my work. I've been on the prowl for industrials to come back into play with the expansion within the economy. So I'm going to share with you an area there that is looking really quite interesting. So let's do just that. As you know from here, I always like to take a look behind those sectors. Where are those potential areas of strength? So I'm using ETFs, and we're going to be taking a look at the NASDAQ, the S&P, small cap stocks, and then other areas very relevant, semiconductors and software. So what we can see, we've already reviewed the Dow up here in the forefront with the S&P, but let's take a look at software stocks. This is an area that's been a super strong due to growth area in a very nice confirmed uptrend. And it did experience a pullback earlier in the week. Now, software stocks historically have been really responsive to interest rates and inflation fears. They do tend to, as other high growth areas, pull back. But we did see, again, as we were looking at tech, a nice end of week support here at that 21-day simple moving average. Your outside momentum indicators still positive. So I know with my MEM Edge report, I've identified several high performing, certainly outperformers that still look quite constructive. So I would urge you to take a trial, take a look at that report if you're not a subscriber. But let's move on, because I talked about industrials. I want to share with you this one area that is looking very compelling. This week, we are seeing a potential downtrend reversal with this break up above this 50-day simple moving average. The RSI up here above 50, trending higher. Take a look, the MACD, we have that nice black line up through the red, and then the MACD is now poised to head into positive territory. So this is the most certainly interesting chart for me this week. From here, we're going to drill down where in transports and take a look at some stocks that are looking really interesting. A lot of it is earnings related. You want to see transports perform well. It's going to align with the economic expansion that is currently taking place. So let's take a quick look at bank stocks, because as of last week, they had not quite reversed, but this week they did, confirming some of the larger cap bank stocks that were added, certainly to my MEM Edge report. The uptrend remains, but there is a caveat here. We want to keep our eye on Treasury yields. This is a daily price chart of the 10-year Treasury yield, and we can see that it had a nice healthy upward move earlier in the week, but a declining end. It was down 5%, but we're right here at that 1.37 area, and we're going to want to see how this yield performs here. We want a break back above that 50-day, and we want the outside momentum indicators. Now, I'm not saying that we want higher rates, but certainly as it relates to bank stocks, this is something that you're going to want to keep an eye on if you are looking and thinking about broadening out your exposure there. This is one of the characteristics rising rates do help bank stocks. So let's take a look. We also want to pay attention to an area within tech that really underperformed last week, and that is semiconductor stocks, down over 2.5%. And with that, however, we can see that the outside RSI is still positive, up above that 50. And then your MACD still up here in positive territory. There was one specific area within semiconductors. There are three major sub-industry groupings. And the one that got really hit last week were memory chips. There's a report that there is an excess of these memory chips in the face of reduced demand. So stocks in that particular area really got hit. while other areas of semiconductor remain strong. So something definitely worth noting here as we move on. So let's go ahead, because from here, as always, I like to share with you some insights as far as areas of the market that are experiencing money flows and could conceivably, of course, trade higher. So I talked to you about that concept of high yielding stocks, and I'm going to take us through a couple of different areas. First up, we can talk about and take a look at utility stocks. In addition to having that high yield, of course, we want to see a constructive chart. So first up here is, it's not a particularly large utility name, but it's Public Service Enterprise, PEG. They service New Jersey electrical utility. And I'm going to go ahead and mark this up. The company also offers a nice 3.2% yield. Actually, let me go ahead to this base breakout, and we can see that the stock did experience a nice base breakout, and it is in a very nice confirmed uptrend from there. Let's go ahead and take a look at some other utility stocks that are experiencing nice upward moves in nice uptrends, and you'll see that a lot of them have come out with really quite strong numbers. This is UGI Corp, a 2.8% yielder, nice base breakout here. Your outside momentum indicators looking constructive, and this is a 2.8% yielder. They did come out with earnings 85% above estimates. So it's in a very nice confirmed uptrend. We can look at HE, again, not a particularly large one, but they do serve several or many of the islands in Hawaii. And we can see that the stock is also in a nice confirmed uptrend as it finds support at this upward trending 10-day simple moving average, a nice 3.2% yielder. They just came out with numbers that were 18% above estimates. So for those of you interested in participating, and there was one particular area that uh, continued to crop up in utilities, and that is electric utility stocks that service and help Florida. So increased potential demand there. This is Nextera and EE, certainly really out of this base breakout already, but certainly worth noting. It's 1.8% yielder that is in a nice confirmed uptrend. When you get these stocks that really start to move ahead of their peers and get into these confirmed uptrends, I like to add this 5-day simple moving average, and you can see that that now acts as an area of support. The stock certainly is overbought from here, but definitely worth taking a look at. We're going to take a brief break, and from here we're going to look at higher yielding stocks in other areas, as well as the move into industrials. We'll be right back. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my biweekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this biweekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge Report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. So again, from here, I'm going to take us on a journey through the area of transportation stocks, because this downtrend potential reversal really looks quite compelling. I like the volume characteristics that we got here on Wednesday when this particular index broke above the 50-day simple moving average. We can see the RSI up above 50 and trending higher. And of course, ideally, we're always on the lookout for this type of a move with an eye toward a more extensive continued uptrend. The MACD had that crossover, a nice breakup above neutral zero would be quite constructive. So from here, I am going to share with you particular pockets of strength and names that look really quite interesting. So first up is a transportation logistics company. This is XPO. This stock, I'm going to pull up a weekly just to give you a feel for what it can be capable of. It has been a big winner for my MEM Edge report in the past. So let's go back to that daily price chart, and I'm going to share with you, we're going to mark up certainly the characteristics that make the stock look really quite interesting. So this week we did get this nice lengthy base breakout. The volume's not really there, and that is one component that I did discover when reviewing a number of these transportation stocks. I would be more convinced if we got nice volume, but we certainly can't ignore these other indicators. We can see that the RSI trending upward. MACD already had that black line up through the red, and then we can see that it has broken above that net neutral zero. So having the stock look really quite constructive. So from here, I also wanted to mention to you, and this is really relevant, something that I've found over my many years of reviewing the markets. And of course, for 15 years, I worked with professional money managers. And I've noted that when there are particularly industry-wide conferences that take place, there's a big medical conference that takes place every January, you're going to see movement in stocks within that industry group, simply because the CEOs, CFOs are out there, they're touting their particular companies. And upcoming next week is a transportation conference that's being put on by Deutsche Bank. So I certainly wanted to note that, because oftentimes, again, these companies will be talking about their current earnings and sales, their outlooks going forward, and you will see names respond as these institutions respond to what they're being presented with. So here we are with ODFL. This is a trucking chart stock, and I thought we would go ahead and start here because the company did recently come out with earnings. So on July 28th, so that would take us back here. And upon the release of that earnings, the company did break out of a nice 6-week base, and it propelled the stock into this uptrend. So we could conceivably trade higher, although we are getting a little bit stretched here with the MACD and the RSI. However, historical precedents can really be quite helpful, because it will show you that ODFL, as of, for instance, we're going to look at other names here, but it can remain in that overbought position for some time. And oftentimes any kind of a pullback can easily present itself as a buying opportunity. Let's take a look at another trucking stock, certainly a bellwether. A lot of us may have heard of JBHT, that's JB Hunt. Let's see if I can pull that one up. And this particular stock or company also is looking compelling. We can see it is currently forming the right side of a base. Pretty good volume here. I would like to see higher, but certainly relative to its prior couple of weeks, we are seeing nice volume as the stock continues to advance. So from here, I am going to be on the lookout for a 4-month base breakout at this 182 level, but certainly you can still take advantage of this potential near-term uptrend that is taking place. One other certainly bigger name among truckers that we can take a quick look at is KNX. This is Knight Swift. There was a merger, but Knight Swift a little bit choppier here, but I did want to bring it to light because they are involved in areas that would benefit from that infrastructure bill. In addition to delivering food and retail items, they also transport, housing, and building related materials, manufacturing materials. So keep an eye on this one, although you'd have to have an appetite for the back and fill that we are seeing. One last name that we can take a look at in trucking is Werner Enterprises. And this stock is company is a little bit smaller. It's just in the beginning potential stages of reversing its downtrend. Analysts are raising estimates, and all of these trucking stocks are trading at very low multiples, 14, 15 times. So worth noting. From here, I'm going to move on quickly to take a look at a couple of rail stocks that are seeing nice earnings growth and potential downtrend reversals. This is Norfolk Southern, NSC. They came out with their numbers in late July. So a bit of a latent response, but still there nonetheless. Nice high volume characteristics on that break back above that 50. And the company reported 114% year over year growth, also has a nice yield, 1.5%. Let's take a look at CSX from here, and we are going to see certainly a similar pattern as far as reversing this downtrend a little bit further along in its potential advance. This is another company that came out with very strong earnings. I'm going to go ahead and add that 5-day simple moving average that I mentioned to you, that once these stocks really start to take off, it becomes a lot more relevant. So what happened here is the company did report their earnings at this juncture. So we can see that there was a gap up in response, 136% year over year earnings growth, 40% above estimates, but the group was not in favor. So from here, it did pull back. So with the group dynamics turning constructive, CSX is finally responding to those very strong numbers. And again, another base breakout potential here at about 34.5. So keep that one on your radar. So from here, I did want to go ahead and share with you base breakouts or other areas that are experiencing they're higher yielding and they are seeing nice upward trending movements. So first up, let's go ahead and take a look at Philip Morris. There was news on this particular stock. It has to do with a buyout opportunity over in the UK, but the news did go ahead and pop the stock up above this essentially flat trading period that it's been in for 2 months. So well worth keeping on your radar screen with this 4.7% yield. Another consumer staple stock that we can take a look at. This is Tyson. Now, granted, it did already have a very explosive move. Now, this move is all about earnings. The company came in with numbers well above estimates. So we can see in response to that earnings on Monday, gap up, huge volume characteristics, and now a subsequent base breakout. So granted, it has had a big move, but from here, let's go ahead and take a look more as an educational item. We can use the intraday as a guide. We're not entirely out of earnings season yet, but so here is that gap up on Monday, and in turn, we did see your outside momentum indicators turn positive. And had you bought the stock or it was on your radar, you can stay with it as long as it remains above each of these. This is a 5 and a 13-hour simple moving average. We had certainly a period of digestion here that lasted a couple of days, but again, propelled into an uptrend. So something to keep in mind as we, again, continue with earnings season. Let's take a look at one last staple stock that also came out with very strong numbers early July. This is KO, Coca-Cola. And it's really just more marking time from here after having a pretty big move for a big consumer staple stock. It's a 2.9% yielder, and it's poised to break out of this nice 3-week base here. So potentially keep that on your radar if you are on the lookout for consumer staple stocks with nice yields. So from here, I did want to share with you some consumer discretionary stocks. We're moving on to a different area because, as mentioned, discretionary stocks are just now starting to potentially release their earnings. I talked about Target coming out with their earnings next week, pretty much priced for perfection, but I know the markets will be watching very closely because this particular company has gotten a lot of things right as it relates to their digital sales, same day delivery, and so on. So that bellwether name may impact other areas, but let's take a look at a company that did report this actually August 5th, and then I'll share with you a company in the same group that's going to be reporting next week. This is Carvana, CVNA. They are online only used vehicle sales platform. And we can see that Carvana, they came out with 142% year-over-year growth. Any of you in the market for a vehicle will know it's been tough, particularly used vehicles, not a lot of inventory, but they did see huge growth. It was 170% above estimates. So the stock did gap up in response. Now, it did suffer a little bit earlier in the week because consumer price index showed a really sharp drop in car sales, but that is primarily inventory related. So I'm going to share with you from here another company that is in the same industry group and due to report next week. This is CarMart, CRMT. We can see it's forming the right side of a base, and they're due to report on Tuesday. So you can keep that on your radar. Another consumer related name that is looking interesting. It's already reported their earnings on August 2nd. And this is Travel Center, and I'm pointing it out because take a look. This is that big gap up that I talk about can occur when these companies come out with strong earnings. And then subsequent to that, the stock has broken out of a very lengthy base. And this particular company has many supermarkets throughout the US. It's all about individuals taking road trips. International travel is pretty much non-existent. So they are seeing tremendous growth. They did see 62% year-over-year growth, but 1,000% above estimates. So from here, we can just go ahead and take a quick peek at that intraday. I do like the 1 hour rather than that 15-minute. That's a little bit too whippy. So not really interesting here. A little too dicey. General trend is down, but let's take a look at a couple of other names that we can keep on our radar. TPR is Tapestry. This is the old Coach purses. They also have clothing. Nice 3% yielder. And let's take a look because they're due to report their earnings on Thursday. The stock did have this pullback, which would be natural given the super big advance from October into May. So more recently, that downtrend has been reversed. The company, the primary source of their sales is China. They're very, very big in that marketplace. Chinese, and unfortunately, their GDP is not as strong as was anticipated, but going to keep an eye on this because here's another retailer that actually came out. China is a big part of their market. This is Nike. Look at that gap up. So keep an eye on that one. I'm going to leave it at that. Again, go ahead and use that link below. You're going to want to take a trial of my MEM Edge report. Lots of other dynamics taking place beneath the surface that I did not get to today, and you'll have access to all of my recent reports as well as this Sunday's new report. Everyone, have a great weekend, and I will see you next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.